All right, so since we have such an ambitious agenda, I'm going to call up my global panelists now, and we're going to roll right into our global panel, okay? So, Marc-Antoine, and, yeah, Mitch, and Ernesto, right? Okay, and Ryan, how are you? And we're going to play the game of pass the mic, guys, okay? And Rich. And so I'm going to let you guys share one mic, and we'll pass it back and forth. Now, I will admit, this is an unusual place for me to I'm only meeting three of my panelists for the very, very first time. But, you know, I can dance. Wore my dancing shoes, right? So what I'm going to do, guys, one of the ways I like to run a panel is I'm not into I agree with everything that the last three guys said, but I'm going to spend 30 minutes telling you a couple things more. I'm going to ask each of you a question, pretty quick answers. I'm going to try to keep things fairly lively, but I want to start by just asking each of you to just take a minute to introduce yourselves to our audience, really in the context of sort of, you know, global entrepreneurship, where your global entrepreneurship experience has been to date, okay? Emma, you got the mic. Go for it. No?
Hi everyone. I'm a global entrepreneur, Mike, because first I come from a different country. I come from not only Canada, but Quebec. And for those who have read a bit about it, it's the only French-speaking and Catholic-based culture in North America. So we do have a lot of complexes because of that, and we'll get to it shortly. But today I'm here to talk about NetLift, which is my fourth company. Some of them have been built, you know, manually with no cash. Some others have been, you know, raised venture capital and everything. But most of it, the bigger challenge we had, and I had before, is to getting companies I've built out of Quebec. Okay, so if you think that Americans are, you know, how do you say it? No, I wouldn't say that, but I mean, for us, the universe ends, you know, at the frontier. So it is a very big challenge culturally, over the language, over a lot of things. So yeah, we'll discuss the challenges of getting a business out of its natural ecosystem.
Hi, my name is Dave Antilla. I'm a serial entrepreneur. I started my first business at 20, and I've built technology and non-technology companies, and I've moved them. I'm an American, although I spent a significant amount of time in Canada, in Ottawa, in fact, same as India. And I've moved companies from the US to both Europe and Japan, and have done business on all of the continents, except for the A continents, Antarctica, Africa, and Australia.
Get you a partner for the next one.
But I'm currently working on moving the business from here to Australia.
Oh, great.
So
look forward to hearing more about that. Thank you.
Thank you.
My name is Rich Pearson. I'm the Chief Marketing Officer at Elance. This is my largest company in a while. I've been in 4 startups. Last one sold to Twitter, Posterous. I lived 3 years in the UK, and Elance is all about connecting businesses with freelancers around the world. Most recently, I was in Nigeria 2 weeks ago and just had my mind blown about the amount of talent there and entrepreneurial aspects of Nigeria. So I'm blown away by the students here and know that hopefully I get to talk to them.
My name is Ernesto Paez. I'm an investment manager at Ecosystem Ventures. We invest globally. I was just in India in February for 3 weeks working with one of our investments. We've also invested in Europe. So we just like to get our hands all over the world, especially in emerging, like India is a really hot space for us right now that we're excited about. So. But yeah, we're not constrained to the US. So we just like finding great entrepreneurs around the world, and we've actually had some of our companies use Eli for some projects.
Thank you. So Ernesto, I'm going to start off with you. Pretty significant challenges when you have the world as your potential portfolio of investments. How do you triage that? Because that seems like there's just overwhelming amounts of data to have to filter in order to make decisions as to who and where and how.
We rely on our partners, some like 500 startups, amazing what they're doing. So we like great partners like that as well with our associates around the world. So we rely heavily on them. And then pretty much, and then after meeting the entrepreneurs, then we actually make the trip out there.
Okay. So walk us through, maybe to the extent that there is such a thing as a typical investment. What's that process look like? Assume a lot of folks in this audience would love to be the recipient of your next bank wire. What do they need to do? What's the process look like from your side and their side?
From our side, we're really simple. We're very easy. So one, we have to like the idea whether they're tackling, right? Is the market big enough? Is it really scalable? Is this product really even needed in the world, right? Like in India, they don't really care about the next app. They could care less. They have other problems. So what we do there, go through their pitch, a few meetings, maybe meet some of their advisors. They have to have strong advisors for us, because we can't spend 100% of our time. We have a whole bunch of other companies that we need to deal with. So that's how much we go. We like to make a quick decision within a few weeks. We don't like to drag it on because fundraising is a pain, a major pain. And we don't like to drag on the entrepreneur as well. It's not fair for them as well. And then from their side, it's just give us as much information as you can. Be transparent as much as possible, because we're not going to lie. So if we really like it, we're going to go ahead.
Are you the first institutional money in to these companies typically?
Yes.
So let me transition now to Marc-Antoine. So Marc, full disclosure, I've known you for years.
6 now.
Yeah, 6. We're getting old, buddy. But as you stated very articulately, you come from a unique ecosystem. Quebec is a gorgeous place to eat poutine and foie gras.
Play hockey in April.
Yeah, and play hockey in July on the ponds. It's a hell of a place to build a company from, for a lot of reasons. One of which is the completely dysfunctional risk capital ecosystem that barely exists, or it pretends to exist, but let's be honest, it really doesn't. So you have been like a force of nature doing this 4 times. I'm going to pay for your therapy when we finish up today.
Thank you.
Okay. I apologize for that. You can't help yourself, buddy. I know. But we're going to share one experience, right? You were very ambitious in your last startup. You were somebody who was working nights and weekends to bootstrap your company. You got a lot of traction. And you had the challenge of bringing in an investor who eventually proved not to be as ambitious as you were. And not only was he not an accelerator for your business, he turned out to be a boat anchor for your business. And his reticence was about the big bad US. And next year we'll be ready. And it took 3 years and he was never ready. And you decided, I'm going to go do something different. So talk about the challenges, because I think what your experience has been embodies what so many entrepreneurs from so many non-innovation cluster ecosystems have to go through year in and year out. Talk about how it's been and what you're going to do differently this time, if you could. Because I know you're moving at a much faster rate than
Look, it's a huge question, and I'll try to be as nimble as I can. But yes, I'm not going to talk about myself, because I'm extremely happy doing what I do, because what I love to do is start something new from the scratch and get it to a point, usually the break even, where I know that if I can leave, the company will be great. Because I don't want the company to be successful because of me. I want the company to be successful so I can leave, right? Now, the problem is, I have no personal ambition for myself. I have it for the business. What I love to do is to grow businesses, right? Now, as you told, Montreal and Quebec in general is not a healthy ecosystem in terms of investment. It is in terms of technology. For example, if I do research and development, I can get 85% of the amount I pay, because this company I built myself from tax credits, thanks to Canadian government. So it's extremely cheap to build good technologies. Now, in Montreal, you will find hundreds of cool technologies, but no market traction. So what I try to do better now, and I always did, basically, is the best money I can get is in my customer's pocket. So even before I had a product, this time, I had a PowerPoint business cards. I went to potential customers, knocked the doors, and they said, that's a great idea. Build it. And I did. So it was sold even before it was built, right? So the first advice is you don't necessarily need money to get a customer. You need to solve a problem, right? Second thing is, we're not big, okay? We're just 6 people. But even now, in Lyon, France, they had a problem. They had a project with IBM. Called them, and we actually are discussing implementing this solution in France without having this thing completely, packaged and working in Quebec. I don't really care. I need this business to be global, And in healthy ecosystems such as Silicon Valley, you have other problems, which is maybe too much money too early for too unexperienced people. When you have a small amount of water to drink and you have to cross, a desert, you start doing things differently, right? You have no money to waste. So building a company with a very small amount of money, that I can do, right? Give me, the first company you mentioned, it's called Amelia. It's still, the leading online registration platform in Quebec. We have, more than 700 customers in that province only. It could have been Eventbrite, all right? Because we were built in 2003. The problem in execution, ecosystem, and I was younger, I made some mistakes, obviously a lot of them. But the problem is I should have done 10 years ago, which I'm doing now, is take the plane, get here, not for you to learn something from me to learn something from you guys, right? It's much better for me. I'm 1 year, 150, okay? So that was a good trip. So basically, these are a few things that, needs to be done, but having too much money to, change a kitchen in the office is not a good idea, Keep focusing on extremely simple things, get a milestone every single week, right? And if it works, just execute, money will come, and it will always come. But this is it.
You are the most cash-efficient entrepreneur I've ever met. I spend more in lunch than you do in a year of operations, too. But I'm Italian, so that's not a surprise, right? Rich, Elance, very interesting company, been around a long time, but I assume that a lot of your people on the other side of the two-sided market are people that are supporting entrepreneurial ventures. So can you talk about how Elance serves the global entrepreneurial community, what some of the key trends are, some of the key stats?
Sure, yeah. Elance really was founded, if you think back, 1999 to be eBay for services, and then pivoted as the entire market cratered and built enterprise software until 2006, at which point we sold the company, took 10 people out. This was in 2006, before pivots were cool. Took some money out, 10 people, and then started Elance as you know it today in 2007. So a long journey, and a lot of the original management team is still there. But in terms of what we're seeing and how we help global entrepreneurs, and why this panel is so interesting to me is, we help people work differently, from whether it's cash management, which I completely agree with. Coming out of Posterous was YC, and it was just, let's build every week, let's build something that someone needs, and then really get it out. So being able to execute that is really hard when you only have 2 or 3 people, or if your skills are in these 2 deep areas, but you've got gaps in other areas. So for any entrepreneur, global or otherwise, it's really about thinking about what you're really good at, what you want to do, what's core to your business, and then how can you use talents on demand, if you will, to help you execute faster and fail faster if you have to. I've had 4, I'm 2.5 for 4 in terms of the startups. The one that was a miss, it just took us too long to execute. It was peer-to-peer online backup, maybe not a great idea to begin with, but this was 2008, but it took us too long to execute. So being smarter about how you use talent is really how we like Elance to be with entrepreneurs, and allowing them to fail faster or execute faster.
So Rich, give the group, the audience, some advice. How can they best use Elance as a way to scale their entrepreneurial ventures? What tips would you give them? What do they have to look out for? What are some of the pitfalls? Where's the best leverage within the Elance community globally?
I think I'd first look inside yourself, figure out what talents you have and what talents you want to go out. And I'm happy to talk details about Elance, but I don't want to shill for how you use it. But some key things to do, as you would in any venture, as you're engaging with a freelancer, start small. You can start with just a small fixed price project or hourly. Send it up to 2 or 3 people. See how they're working with. The reason I'm at Elance is because the first 3 startups I was at, I used it. And I was able to hack the marketing department where I'd come from Yahoo, where there was an agency, and I was like, it's going to take me 6 weeks and $10,000. If you try to get a user experience designer here in San Francisco, it's $250 an hour, and you have to wait, and you probably have to bring them coffee. You can get on Elance, and you can get somebody, whether they're in Toledo or Romania or in India, and have them working, within hours on your job. So I would the best advice is, figure out what you're not great at, farm it out little by little, find someone, and then just lock onto them and don't let them up, because it's a secret weapon, and I encourage you to use it.
Do they speak English in Toledo? Seems pretty far away.
They do, yeah, they absolutely do.
Okay, cool. All right, David, what's an American guy like you trying to start a company in Australia for? What's the story behind that?
Well, mate, let me tell you.
Okay. Throw a couple of shrimp on the barbie and we can talk about it.
Yeah, it's actually a good case for what I've learned over the years about doing this. Is two big pieces of advice to start with. I was really lucky to go to a college where one of the trustees was a woman by the name of Letitia Baldridge. Yes, most times. And she gave us all a copy. She spoke at the college, and she gave us all a copy of her book on protocol, which was her first book before her book on manners. And I read the book and was amazed to learn, because I was, a dumb American, and I was amazed to learn that you should never take knives to Argentinian meetings because that's offensive, and tea and cakes are always served in the UK, and don't interrupt that before you start your meeting, and such and so on.
Didn't you talk about the fact that you don't take a weapon into a Texas meeting? It's also offensive.
It's frowned upon if not everyone is armed, yes. But what it taught me was that, and I led a very sheltered life in Western Pennsylvania and went to college in Ohio. By the way, in Toledo, they do speak a different language. Today is Saturday. And what it taught me was that there was a world beyond the oceans and the borders of America, and that people did things differently. They spoke different languages, they had different customs. And the first thing that I sort of put into place in the entrepreneurial vein was, and I made this mistake the first company I took to the UK, was I invested before I should have invested. And I'm not talking about just capital. I'm talking about actually going and actually having a plan, and before you invest your real heavy capital, you need to do some light capital investing to really understand who is this customer base? And who are the people you're going to be working with? How do you find the first managing director? And how do you convince that managing director that they can't have their office in Ipswich and it needs to be near the airport, because people are going to be coming in from America and people need to be able to get to the office in an expeditious fashion. Little details made a huge difference when we first moved the first company to the UK. And so let me switch to what we're doing, taking a company to Australia. So it's a company that specializes in business process management, BPMN. And there's a big market in the US for BPMN, but there's even a bigger market in the Southeast Asia corridor, because people there are knowing that even though the big bear's been down for a while, they're fighting back, and they're going to have to compete at an exceedingly different set of levels going forward. And so they're really investing in process management, and not just workflow, not just moving data. It's about really looking at what your process maturity is, where you are, where you need to get, and how long is it going to take to get you there. And the market is underserved in Australia. It's well served in Singapore, so we're staying out of there. And it's well served actually in China and Japan and Korea, so we're staying out of there. But Australia and New Zealand, to an extent, represent a good opportunity. So the first thing when you're going to jump a company from anywhere to anywhere else, is to really get in the market and leverage your contacts and understand, is there really a play? To quote John Doerr, who most of you should know from Kleiner Perkins, the first question he asks every entrepreneur who meets with Kleiner Perkins, the one important question, is why now? Why do you want to go into this market now? What's so compelling about this market now? Do you have the assets and the capital and the resources to actually attack that market in the way that it needs to be attacked for you to actually gain a leadership position? So for all of you business starters, or maybe you're already in a business, as you move from locale to locale, making the early investment, the cheap capital investments, I always call it, to really understand the market, the players, develop the partnerships and relationships, and find the resources that you need to succeed in that market, will make the heavy capital that you invest later when you actually land in office space and hire, etc. It'll really have a better impact if you do that heads-up work first.
That's great. And I think You know, I look at Marc-Antoine, and Quebec has always been this fortress, this extraordinary, you know, natural beta test site. Because, no, and I don't say that derogatorily, it turns out that it's just it lacks competitive intensity. So when you look at the average, first of all, Quebec users are not early adopters. So to be able to sell in Quebec, you know, you really have to be able to understand the pain point and deliver a solution, right? So you're talking about extending that now to other parts of the world, into places like Oceania, for example. But I agree, right? In the world of lean startup, we have Hugh, who's going to talk about lean startup within the context of Intuit in a little while, right? It's all about validation. It's all about proving it somewhere. And when I started my career as an entrepreneur 25 years ago, we would get, you know, raise $50 million, you know, invest massive amounts of money in servers and infrastructure, and then go do the Bataan Death March to Wall Street. And if you could work your way through Wall Street, you would have permission to go downhill. Now you've got to do things way more quickly. You can't afford a 24-month sales cycle. So you've got to now go into a place that's willing to adopt early, quickly, and then build on that foundation. So that being said, I want to now go back to my friend Ernesto, who seems to have a global perspective. Where are the most interesting investment opportunities happening from your unique perspective? What are you seeing? Because you've got a very broad view of the world, given the mandate of your fund. What's going on out there?
As in?
Again, you talked about, you're looking at India, you're looking at China, you've got a Latin American background, so you're looking at the world. Very few investors do that. Where are the pockets of opportunity that you're most excited about, that you can share with our audience today? What kind of things are you seeing?
We haven't done much in, actually zero in Latin America or South America, but Brazil is obviously a hot area, but India is just, the opportunity in India is so big. Yeah. I mean, it's just like, I was just amazed by this one opportunity. It was like people have a hard time finding eye doctors. And there was this one little startup just like killing it. And they had set up these 10 little eye doctor shops. And they were just doing amazing. I saw their numbers, it was amazing. But in this is that scale. In Mumbai, they were doing amazing. I was just surprised.
Well, can you quantify this?
They didn't. They didn't tell me the numbers. I mean, like that guy, I can't say. But so I mean, India's just amazing. I mean, because the southern part of India is different from the northern part of India, and Mumbai has 25 million people, and then I mean, where I was in Pune is 7 million. So the second-tier cities, and there's just a broad range of opportunities. Just you could name it, and it's wide open.
So Rich, you sold a company of Prosperous to Twitter recently, right? Looking at your background, you've been in the Valley a long time, right? You've done startups, you're at Yahoo, I mean, so you've kind of done the whole Silicon Valley thing from early to big and mature. What kind of things are you seeing in terms of global opportunity? Are you seeing companies trying to go global more quickly from your vantage point in the Valley? Are you seeing a broader array of entrepreneurs coming in from outside the U.S. to help start companies? What's your perspective?
I think it's a great question. I still think one of the biggest faults of U.S. Silicon Valley started companies is number one, I learned this in my second startup, is the biggest opportunity is outside the U.S. So I still see entrepreneurs who I've worked with who don't get that. So clearly there's a need to focus, and it's the easiest place to focus, so I get it, but it's, do you build that next feature or do you localize? And that's a decision that, I've had many battles with founders in trying to understand how to do that. So I think that's one trend that I wish had changed, but really hasn't. The amount of entrepreneurs that we see coming from outside the U.S. is phenomenal, and that I think is the one thing that's changed dramatically over the last 3 or 5 years. We have partnerships with Founders Institute that is all over the world, and we see the majority of our business shifting, from New York and San Francisco to London, Berlin, and seeing some of these startup hubs really start to take advantage of ways that they can outcompete the folks maybe in Silicon Valley who have more money and a war chest. So it's becoming a strategy, and I find that the entrepreneurs that I've met outside Silicon Valley, even outside the U.S., they're a lot scrappier, and they're a lot closer to the business.
Mark, I want to talk a little bit about NetLift, right? What I love about NetLift, it really does go back to a point David raised earlier about, going to a less competitively intense market. So while Uber and Sidecar and many are going after the more traditional consumer rideshare space, you made a very conscious decision to go more after the enterprise space, right? So not nearly as competitively intense, probably a lot more short-term demand, opportunity to scale the business more quickly. Now, on Monday of this week, the other side of the weekend, we're going to do an innovation brainstorming session at Holt over lunch. And Mark's going to join me, and we're going to have Holt students from all around the world talk about how we scale your business in different countries. Talk a little bit about what NetLift means in terms of corporate productivity, how you might translate that outside of North America into other countries around the world, what your vision is there.
Very clear for everyone to understand. There are three main types of ride sharing across the globe, right? We're talking about consumption in a new way and sharing economy in this way, right? The first you probably know is what Uber and Sidecar is doing right now, which is trying to solve the problem of moving in downtown everywhere in the world, right? And they do it extremely well, right? Basically because people don't find necessarily a good way to travel in a taxi and everything. The second is what has been around for years, especially in Europe, is traveling from one city to the other, because you might not have a train or a bus line there. So, and even in Quebec, it works perfectly well. I mean, everyone can make $20, $40 to travel with someone, which is great. But the missing link is what we call the commuting ride sharing. It's everywhere in the world, for cities bigger than 500,000 citizens. You have sometimes, most of the times, problems getting from suburbs to downtown. And people have two choices. Either they go with the public transit system, which works fine in downtown as well, but if you live at 20, 25 miles from your work, you can't do it. So you have to have a car, but then good luck with the parking and the traffic jam and everything. So what we develop is an algorithm that is based on what we call the intermodal ride sharing. We connect with the public transit systems. Okay, so thanks to open data everywhere in the world, we know how to plan a route from home to work. But we can match people that did not share an origin and a destination, because most of people, most of your colleagues don't live in the same neighborhood. It doesn't exist, right? So it is a global game, because in Canada we only have a handful of cities that are big enough to support this thing, right? But in the world, in Mumbai, if I have 30 more million people, think about moving these people. It's massive, and because of the state of the finance of every government everywhere, we don't have the $1 billion now to invest to build new bridges and roads and trains. We don't. Okay. So what's the solution is to use the millions of empty spaces in every single car everywhere and to sell it by the day. Now I don't have the muscle right now to reach to those people. It's a consumer. It's impossible, and nobody will lend me this money. But if I knock on the doors of every corporation, they love it, because we can track where everyone is, because we have the check-in and check-out app on the iPhone. We can track how many greenhouse effect they save by letting their car at home, and they love it. So they're ready to pay for the data we collect, and maybe send this data to the IBMs of this world that will make it intelligible for public transit companies, bigger corporations, and even cities, right? We're not here to make intelligent out of this data. We're here to help people move from home to work and letting their car at home. That's as simple as that, right?
So I love the sharing economy, the real-time economy. I know you used Airbnb to find a place to stay.
I did. I'm actually at an Airbnb spot in San Francisco. I eat my own dog food, right?
Yeah, and I know South by Southwest is just wrapping up, and if it wasn't for Airbnb, it wouldn't attract nearly the number of people because they just don't have enough hotel space. But I saw a really interesting announcement over the weekend where Major League Baseball is now sending mobile alerts to people that attend games that if the good seats are empty, they will actually send you an email and let you know that you can upgrade to a seat behind first base or behind home plate at the beginning of the game to monetize, almost like an airline, right? The first class seats are perishable goods. And it does beg the question of loyalty and cannibalization. But again, they're trying to sell those seats because the season ticket holders don't show up. So it's a remarkable shift in the way that we're doing things. I know we've got a student here who is trying to take advantage of the fact that we have now these Twitter flats in San Francisco. They're 400 square foot flats. You can't fit vacuum cleaners and most cleaning supplies, so you need to share stuff. It's just amazing what's going on. And there was something about how if you want to fly out of San Francisco Airport, you want to leave your car there, you can actually advertise to rent your car while you're out of town. So you're tapping into a massive new trend. So let me, how much time we have, Vanessa?
We still have about 5 minutes.
Okay, that much time, okay. Yeah, perfect. How much time?
10 minutes.
Oh, beautiful. So I'm going to ask one last question. That's the area of capital. So as we leave the U.S., raising capital is a challenge, although in places like Quebec, we have the $750 million Terrorless Fund, which is a public-private fund. And we can talk about the efficacy of how that fund is deployed or not, depending on how combative we want to be. But the thing that I think is really important is the world of funding has gone through such a radical change. We've got crowdfunding, right? The number of companies, including tech companies, raising now millions of dollars on Kickstarter and the like. The fact that you have the Founders Institute and so many other accelerators that have gone around the world, the Open Angel Forum. I want to ask each of you from your own perspective, right? What has AngelList done, right? Because it used to be the old cliche, an angel investor doesn't invest in any company they can't drive to over lunch. I think those days are done. So what has AngelList done? What is Kickstarter doing? How are you being resourceful by tapping into government money, knowing that we've always paid way too much homage to VCs, right? We've given them way too much credit. We've given them far more, significance than maybe they deserve in the overall ecosystem. So what are the capital changes that you're seeing as you start to fund these different companies? David, how about you first? What are you going to do to fund this business in Australia?
Well, let me say something about AngelList and crowdfunding first. I think and I've pitched more VCs than I can count and raised, a lot of money pitching them. But what the VC model, I'm not going to say it's broken, but it needs a revision because the VCs have made for years promises they can't keep to their limited partners. They can't make the kinds of returns they're looking to make, and in fact, it's the well-known dirty secret in the Valley right now that almost all of the first-tier and most of the second-tier VCs have seed funds so they can play the game too. Okay? So when AngelList and the like came into being, what I noticed happening, especially because my company focuses actually on sort of two opposite ends of the spectrum. Most of our client base are companies that are in formation. We help them hone their strategy and raise money for them. And on the other end of the spectrum, when they're ready to sell to a private equity firm, we have a group that does private equity due diligence, so that the PE guys know that what's under the covers. So when people go up to raise money, what I've noticed the biggest benefit of the crowdsourcing, friend sourcing, et cetera, because the old joke used to be when you were raising private capital that wasn't VC based, we used to call it the 3 Ds and the 3 Fs. Friends, family, and fools, and dentists, doctors, and dumbbells, okay? Those were the people that put money in companies that they didn't really understand, and they didn't care where they were located, right? So now what you have is, with AngelList, which I'm a member of, I look at these things, and the biggest benefit for angels and their companies is the sharpening of focus and the messaging that the companies are developing. And I send my client companies things I see on AngelList that says, how come your message isn't this sharp? Why can't you explain who you are in the marketplace compared to your competitors? And that's really the benefit, because as an angel investor, when I look at companies that I don't know, and founders I don't know, and advisors I don't know, I look at the message and I say, is this something that could actually fly? And if I think it's going to fly, then it might get some of my money. Right?
I mean, it's an incredible 2-second one. I mean, just 30 seconds each. Ernesto, 30 seconds, Rich, 30 seconds, Mark, 30 seconds. What are your thoughts on the new way to raise capital in the altered economic environment we face here?
So we're fans of crowdfunding. Actually, we invested in the crowdsourcing platform, Microventures.
Okay.
Huge fans of Naval and what AngelList has done. So we love it.
Okay. Rich, what are you seeing?
I just think it's a great time to be an entrepreneur. There's so much more money out there. I was just this morning at the food hackathon, And typically at a food hackathon, you don't see angels, but there were 3 angels there, and these are people who thought of the idea 2 days before. So maybe not the best angels, but if you've got an idea, and you can find that there's so many more ways to get capital, and particularly if you can show some traction.
Oh, the number of chocolate company startups in San Francisco is off the charts. It's off the charts. There's going to be a follow-on with diabetic treatment startups next, but right now it's chocolate. Marc Antoine, what do you got?
Yeah, it's good news and bad news, because as the more channels that exist, the more time as an entrepreneur you need to get the word out and promote yourself. So you have, as David said, you have to have a tremendous story and make this story raise, and that people will think about it, picture it, bigger, and this is it. But too much time.
Unlike any other airline, you're going to land this plane on time. Okay, awesome. Now, what we're going to do is we're going to let the audience throw some questions, or we're going to take about 10 minutes. We're going to pass out this. Tyler, will you care about? So let's take some questions. Unique opportunity to ask questions of our panel.
Hi, my question is, have any of you had any experience with, or do you have some advice for, a startup that wants to launch initially around the world, globally, instantly? What are your thoughts?
Okay, I'm going to refrain from answering, so I'm the moderator, so I would allow. So, David, you got the mic, so I was trying to pass the mic down.
So just personal experience, you know, Elance has 80 people, we're in 170 companies. What we've done is we have 110, we call them mobilizers, these are just evangelists. So in order to coordinate anything that we do globally, we have a distributed workforce. So we've used freelance talent to get there, to be our eyes and ears. We have a process to get them out, and it's, you know, I think my job is to like graph fires and figure out which ones are working, and this has been a program that we've done that has really paid off. And I would look at, you know, trying to find people who are passionate about your particular concept and connect them and enable them.
I cannot give any advice on that, because I'm doing it as we speak. So if we see each other next year, I'm going to have much more interesting things to do. But what I can tell you is that I'm trying to land a business globally right now, by city, not by country. So it's basically a matter of trying to find the recipe. How does it work to land this software on a specific big city? As soon as I get the recipe, and next Monday, this is the questions I'm going to ask the students. If you're from Europe, South America, what do you think? Where should you go? The first call, the first business proposition, how do we price it and everything? As soon as I get it, we replicate, and I'll raise money based on that. Today it's too early to do this.
If Brian Chesky from Airbnb were here, he would tell you, be sure where you're going before you get there. Because when they launched here, and he has a very interesting story, and if you haven't heard it, you should go on to Pando Daily and watch his video of his fireside chat that was a couple months ago. But when they decided to move into other markets, and they didn't do it simultaneously, they actually spent time sitting down and storyboarding out, what's it look like in this market? Who's our customer? How are they going to buy from us? Who's our seller? How are they going to sell? Right? Because it's not as easy when you're doing a simultaneous launch in hundreds of countries to tell everyone on a global sales call to say, okay, so here's where you go, here's who you talk to, and here's what you say when you get there. It's never that easy. And it depends on your product too, and we don't really know what your product is, but I would, as I say, make your soft capital investments first and make sure, you know, if only you can launch in 10 markets on 4 continents instead of 186 countries on 7 continents, at least you'll have made that investigation. But the biggest advice is don't jump blind, because you'll feel it. You'll feel it when you fall.
So I'm going to violate my own rule. And this is one of the great paradoxes of entrepreneurship. People think that in order to be global, we need to go everywhere at once. It turns out that's the absolute wrong approach in general. Now, I'm not going to say it's always the right answer, but less is more. So you've got to build a foundation somewhere, right? You've got to find a target customer group that feels the most affinity for your product. and is willing to pay for it. There's a tremendous amount of learning that comes from those initial interactions. And that really forms the foundation that you then build upon. Now, you can scale pretty quickly. So Airbnb actually tried to go global right away, to Dan's point. And they actually were advised by their mentors to scale back to one city, which they did. But once they got that recipe, to Mark Antoine's point, they were able to hit the gas and go really, really fast. Their numbers are extraordinary. So less is more. Go find one group of people that really get what you do, value it, are willing to pay for it, are willing to be what are called early evangelists, really pound the table on your behalf, and then take that global, on some systematic basis. Okay, you're next, and I know that, Jasper, you look like you're ready to run out of the starting blocks. I think you're third, is that right? All right.
Hello, my name is Gabor. I'm from Eastern Europe, actually, trying to raise second-tier funding for my company. And because the system is more so like established, what's your view on like the fund availabilities and also like strategical partnerships in Europe?
Can you tell us what your product is?
It's a like hardware product to do like 3D interaction. Basically, imagine it as like a 3D mouse. We also have softwares on the gaming and healthcare and other sectors on it.
All right.
Thanks so much to the rest of the panel for their support.
You're the elder statesman, you gotta hold it down.
Yeah, this gray hair came from a teenager, not my business experience. So, I've only done a little bit of hardware work, but what I know is that, and clearly I think everyone who goes to school here understands that there's a new regime, and it's in the city. And there's an old regime, and it's currently in the valley. And most of the hardware companies and the VCs that fund them are in the valley. So while every VC worth their salt is trying to find space in the city so they can be close to their investors, or their investments in their portfolios, there are plenty of companies in the valley that you can go and talk to that specialize in it. And the biggest advice I can give you is, again, do your homework. Go and look at their portfolios, see what they're already invested in, see what they're interested in, see the backgrounds of their partners, so that you have something that's pretty innovative in the imaging space. Go find a VC or a group of VCs that actually understand that space, because you'll have an easier time pitching them than if you go and just go up Sand Hill Road and start talking to VCs. You really need to target your pitch, otherwise you'll be here for a really long time trying to find money.
I'm going to add something, and if there are some investors in the room, you will probably hit me after it, and it's fine. But let's say that you try to raise money to achieve your goals, right? And 6 months after it, you haven't raised anything. It's not acceptable for anyone, and not you. Why don't you try to find other ways to be, because in this particular case, maybe an investor will be an intermediate, a middleman, and you want to cut the middleman, right? So is there a shorter path to your goal, which is the handshake for the sale, without going to all of this turmoil? Maybe there isn't. Maybe you need the capital. Maybe you do, especially in hardware. But if there's a shorter way to immediately go with the customer, I would focus on that. It's much cheaper. You can, use your cash to most visit. Try to visit the manufacturer. Try to meet the other people, the decision maker. If you close that deal, you have real cash in your hands, and it's become you're much more attractive to investors anyways. But I'm not sure if it works. But if you can't avoid it, why not?
Yeah. All right. We're going to go to our last question, and I think Jasper. Where is Jasper? Jasper. Are you good? Okay. Sorry.
Or the way, anyway, on the point of corporate venture capital, there's a perception or sometimes a misperception on behalf of some entrepreneurs that if they get involved in that game, that they could lose their autonomy or put their intellectual property at risk, more so than for other channels. Is that a legitimate concern, or is that just a urban myth?
I think that it's situationally dependent, okay? If I look at my friends from IBM, They have been cultivating relationships with entrepreneurs for a very long time. And it only takes one mistake to do harm to an entrepreneur. In the age of Twitter, 20 seconds later, everybody knows about it. So I think that there are certainly organizations, Microsoft was notorious for this back in the 80s and 90s, before they were chastened by the Department of Justice. And they were rightly chastened because they were really predatory. But I think that the world has changed. And that's not to say that you can trust any large corporate. Everyone has a track record, right? We get rated and reviewed on Yelp. We get rated and reviewed in many places today. Everybody has a reputation and a track record. I do know of organizations that my entrepreneurs have worked with where we've had to pull away because we were very uncomfortable with questions that were being asked, etc. But I think it's far more transparent than it's ever been because there's just no way to keep secrets anymore. And you do damage and you can't repair the brand. We're done, right? Twice. How's that? I should be a pilot. All right. Thank you, everybody. Appreciate it. Tyler?
Thank you so much to our panel.